Hello, today I want to talk about productivity growth. Now, I do have some other videos out there. I talk about productivity and productivity growth. You can watch those videos if you follow these links right here. Today, I want to think about why productivity growth is so low in developed economies. I'm going to talk specifically about the US, but a lot of these themes translate directly to other developing economies. To refresh your memory, we're going to talk about changes in productivity growth. Here's one measure of US productivity growth. It looks pretty noisy here. So what we're going to do is throw in an average line here. We can see that the average over this time period is 2.2% year over year productivity growth. Now, we have said in previous videos that growth has not been as good, especially if you go from 2004 onwards. So let's look at the average over that time period. We can see a line there, and we're going to say that is 1.6% versus that 2.2% we saw over the full time period. Technically speaking, this is weak. Now, I've also said that it's even worse if you go back to 2010 onwards. So let's go ahead and do that. Here's an average for that period, and this is 1.3%. Technically speaking, this is dismal, okay? So now, of course, the question is why? What is going on here? Let me just throw a couple of things out there in terms of what might be causing this. We can start with capital accumulation. Companies just are not spending or investing money to get better, right? That's just what's going on. You look at the tax reform from a few years ago. The companies were supposed to take that money and invest it, and what they did is they took that money and they repurchased shares, right, in order to boost prices and improve the compensation of the C-suite. That's what happened there. Capital accumulation has been weak, and it is affecting this. I also want to point out that I did a video podcast with Stuart Dunbar at Bailey Gifford. You should check that out. Here's a video here. What we talk about there is that companies just aren't really investing anymore, right? They're not looking for positive NPV projects. It's a nice little video there. Check it out. I think you'll enjoy that. Another thing going on here, let's look specifically at this actually nice period from 1995 onward, where we saw actually some pretty good growth there. But if we dive deep in there, we find that it's pretty concentrated. It's concentrated in the services sector and the manufacturing sector. If we dive even further into that manufacturing sector, we see that it's driven by computers and semiconductors. That's what's driving it there. But a very concentrated, segregated type of productivity growth there. Now we fast forward to this 2004 period, which was not very good. Again, we see concentration here, but in the wrong way. We actually don't see much going on with the services sector, but in manufacturing, we see a decline in productivity, largely due to the fact that the productivity gains we saw from computers and semiconductors just are no longer materializing. So again, very segregated here. And in fact, we kind of see that in general if we want to compare 1995 and onward to the post 2004 period, that there's a really strong correlation in terms of trend reversal when you look at the companies that really drove the productivity growth in the post 1995 period, in the post 2004 period, they're actually driving productivity decline. So there was just this massive reversal on what was happening there. That is pretty, that goes and extends beyond the service and manufacturing sectors. Another thing that we see here is the productivity gap is growing. So what that means is if you look at the most productive companies and you compare them to the less productive companies, the difference is just getting worse and worse and worse and worse. And unfortunately, what we have is, a smaller number of really good companies in terms of productivity, and we have a larger pool of less productive companies. And as that gap grows, we're seeing more of the effects of these, this larger pool of less productive companies out there. Thank you so much for listening. I hope you enjoyed that. What I'm going to do is I'm going to follow this video up with some more examples or more reasons why this might be happening. Otherwise, this video is going to get too long. So we're going to cut it there, but look for a follow-up video here. We're going to talk about more reasons behind this decline in productivity growth here in the US and in developed markets in general. Thank you so much for listening. Happy trading out there. I'm Brian Kozlowski.